We are live with another quick tip Tuesday, each and every Tuesday at 8 p.m. Eastern Time. Today's topic is LTV. What is LTV? Maybe three letters to you, but it's very important to banks. LTV is loan to value. It's basically a ratio that banks, lenders, institutions use in order to know exactly how much of a down payment you're basically putting down. In layman terms, it's basically what type of loan you're getting and what the value of the home is. So typically, depending on the type of loan you're getting, there's different down payments. So for quick, easy terminology, let's say you're getting a home for 75% loan to value. So basically, you're getting a loan for 75%. You're putting a 25% down payment. The house needs to be valued, appraised for 100,000 or more. You're buying it for 100,000, and the down payment is 25%. So making your loan into 75,000. So that is what is considered 75% LTV. So there's different loan products, of course, that you have different LTVs. So the most common one is FHA. First-time home buyers, of course, you can buy a 1 to a 4 family. Typically, that is a 96.5% LTV. What that means is you're putting the minimum 3.5% down. So you have to at least put the minimum 3.5% down to get that specific loan. Let's see what else we have going on. There's different loan products. Conventional, you're at 95% LTV, which basically means the bank is lending you 95% of what you're buying it for, and then the other 5% you're putting the down payment. LTV, why LTV is so important? This is basically what banks use to see how risky the loan is. So of course, the riskier the loan, the higher the down payment. So typically, if you live in the property, FHA, owner occupied, you can put as little as 3.5% down. So they believe that you're going to live in the property, you're going to take care of the property, you're going to make your payments, and that's why they allow you to go as low as 3.5% down. Of course, there's mortgage insurance to cover them for the small percentage that may not be able to pay. So that's why LTV is very important. It basically gives them like a guideline. Okay, this loan product, this is the percentage we're willing to lend on. The rates may change, of course, with different products. For an investment property, more riskier. You don't live there. You may possibly not take care of it. You won't look after it. You'll probably go there once in a while. And if for whatever reason you aren't able to afford that payment, that's probably one of the first ones that you will stop paying because you don't live in that property. Of course, you're going to go first on where you live. You're going to make those payments first, and then everything else comes secondary. If a property appraises higher than what I'm buying, what is the LTV? Good question. So if, let's say, for instance, you're buying a house, simple terms, you're buying a house for 100,000. Let's use FHA. You have a 96.5 LTV, which means the bank is lending you 96.5% of that value, and you're putting 3.5% down. But for whatever reason, the appraisal, it appraises for 120. You still have to put the 3.5% down, and your LTV will still be 96.5. So the LTV doesn't change if the property goes appraises for higher. But of course, let's flip it around. Let's say the property appraises lower. You basically have to bring down the purchase price to, let's say, if it appraises for 95,000, you would have to decrease the purchase price to 95,000, and then take 3.5% of that, and that would be, you still be at 96.5 LTV. But of course, in the seller market right now, people are paying over. So if the seller doesn't agree to go lower to 95,000, you may have to put a 3.5% down plus either the $5,000 or whatever you guys agree upon. You're putting $2,000, $3,000, $5,000 out of pocket. Can different banks have different LTVs? So typically the LTV will be based on a loan product. There can be specific banks that have specific loan products that are customized for them that they created, and they're not backed by, let's say, Fannie, Freddie, any government loans. But typically with the government loans, whoever is offering those type of loans, it will be the same LTV. But let's say if you're going to a local bank, credit union bank, that they're lending their own money, they have their own loan products, maybe like a portfolio loan. So that can be different if it's not a general loan that all banks offer. If it's a specific loan that only is specific to that bank, maybe that LTV may be different. But typically LTVs are pretty much the same across the board with the generalized of the loan products. So if it's a conventional, of course, it will be the same. FHA number one will be the same. But for conventional, it may be tricky depending on if you're living in the property or you're not living in the property. That can differ. And also there's certain income restrictions, limitations for if you want to put a lower down payment, because actually the conventional loans offer a 3% down payment, so that you can qualify for that. But if not, you would have to do the 95%, which is the 5% higher. That's pretty much it for LTV. I don't want to touch too much on LTV, but LTV is pretty straightforward. Well, for me, of course, because I deal with it on a daily basis. But if you have any other questions on LTV, which is loan to value, how much you're getting a loan for and how much the property is worth or you're buying for, whichever one is the lower amount. If you have, of course, each loan product has different LTVs. If you have any questions or want me to discuss any other topics for next week's Quick Tip Tuesday, just reach out to me, shoot me a message, and I'm more than happy to assist. Enjoy the rest of your Tuesday.